we think if you look at the 5 platforms and the 14 technologies, you have to go back to the early 1900s to see anything remotely resembling it. Back then, 3 major platforms: telephone, electricity, automobile. Today, 5, involving 14 technologies. And the convergence between and among these technologies, we think, is going to cause explosive growth. What we believe is happening is 3 different revolutions. One is a money revolution, one is a financial revolution, and one is a next-gen internet revolution. The last one would be what people are calling the metaverse. So the money revolution is what I mentioned earlier. We think that very few currencies will be playing in that particular game. Bitcoin and Ether are the 2. Bitcoin more dominant from a money point of view. And again, each one of these words is extremely important. It is the first, global, big important word, private, digital, rules-based monetary system ever. Now, Art collaborated with us on our first white paper in 2015. And he tore the first paper we wrote up, as a good professor would. And we learned a lot more about this monetary system from that exercise. But the aha moment for me was when Art said, hey, this is what I've been looking for ever since the end of the gold exchange standard in 1971. And I said, okay, well, how big could this be? And at that time, we were looking at $6 billion in the equivalent of market cap or network value, so $250. He said, well, how big is the US monetary base? This could become the reserve currency of the crypto asset world. And at that time, it was $4.5 trillion. Now it's $8 trillion. Bitcoin today is in the $750 to $800 billion dollar mark, so 1/10 of that. And we see El Salvador adopting it. We see black markets in Turkey and many other countries, because these people know what can happen with fiscal and monetary policies gone awry or with corrupt regimes. So that's Bitcoin and Ether. The financial revolution is DeFi, and really just taking all the middlemen out of the financial ecosystem. A real threat to all of us. I mean, we're trying to, we know that the combination of digital wallets and DeFi is going to hollow out a lot of financial institutions. May already be, because a lot of lending and saving is taking place on DeFi because it offers lower loan rates and higher saving rates. So that's a compelling combination. So we think DeFi it is scaling enormously right now. And I think we've had very good tests. May of last year, we had Bitcoin cut in half, Ether cut by more than half. I was waiting for the leverage in the DeFi system to topple it, and it didn't. And whatever makes these networks, whatever doesn't kill them, is making them stronger. Anti-fragile is a word often used. And then the third bucket here is the next-gen internet revolution. And this is where effectively, longer term, we will take power away from the data aggregators who've enjoyed thus far on first-generation internet the spoils. So that would be Google and Amazon and Facebook. As the consumer takes control of his and her data, and especially in the healthcare arena, we think there's going to be really interesting and creative solutions coming out of the the convergence of blockchain technology and artificial intelligence, and the explosion in healthcare data that we are seeing now. Now that we can sequence each genome for $500. So those are the three ways, and of course NFTs belong in that world, and the creator economy will be turbocharged, creators being rewarded for their creations. And fascinating in the art and the music world to see how art pixels are being sold and then pictures reconstituted, but the initial artist, the original artist, getting a royalty for all of that. So it's pretty, that's been a good tension if you believe in free markets and not too much regulation. It's been a good tension for our own regulators. They see other countries, Singapore, Australia, UK, eager to bring, and UK especially after Brexit, eager to bring innovation into their countries. So it does put a bit of a brake on our regulators. I've seen it in other areas. The FAA, when we first started the company in 2014, said drones weren't going to be a consideration for years. So Amazon took its drones over to India and Australia and Hong Kong and so forth, and the FAA saw the light. I think the same thing is happening with crypto. We've gotten to know some of the regulators, and I'm very impressed at what they know and the technology DNA they are bringing into the discussion at the SEC. Gary Gensler at the SEC, having been, he'd been at MIT working, I think he was a professor in the blockchain space. He sees the power of the technology. And I think at the end of the day, he wants to regulate it, but regulate it in a way that it leads to great success for the United States in this new area of innovation. It came out of our research in collaboration with Square that, wait a minute, if you make Bitcoin mining a part of the utility infrastructure, you actually will accelerate the adoption of renewables faster than would otherwise be the case. Because in St. Petersburg, let's say here, you've got sunshine, you filled up the battery in your home, the excess power is just wasted. Why not have it? Why not have it go into Bitcoin mining, which could shore up the ecosystem and help fund solar and wind and other renewables? So we're definitely seeing eye to eye with Square on that one, or with Block. The crypto markets, highly correlated to equity markets, is when there's a serious risk off. For example, I believe it was late 2018, 19. Early 19, hedge funds, they were very involved with crypto, and they were in very illiquid positions. So what was the most liquid of their positions? It was Bitcoin. So Bitcoin acted just like the stock market. But for the most part, other than during those times when when funds are too leveraged over their skis in exposure to any one market, you will see those occasional, we call them correlation to one moments, but they're usually at extremes and they're usually near the lows.